Hey guys, welcome back. Today we're going to be talking about LCA, which is a SPAC that's going to merge with Golden Nuggets Online, which you might have heard of. So, is it a good short-term momentum play? Is it a good long-term buy and hold? We're going to talk about all of that, but first I have to ask you some serious questions. Do you like money? Would you like to own a casino that throws off cash flow year after year for you? We're going to talk about all of that and the long-term potential of this company starting right now. All right, so we have a lot to talk about. When I analyze a company like this, I like to divide it in four little categories. Number one is what's the potential short term? What's the potential long term? What are the main risks? And fourth, how am I going to play at this? So let's switch over to my laptop and we'll analyze these four categories. And then that's going to help you figure out if that's a play that you want to add to your portfolio.
All right, welcome to the exciting world of online gaming. If you're not exactly familiar with what I'm talking about today, let me just get you up to speed. We're talking about LCA, which is Landcadia Holdings 2. It's a SPAC, so a shell company that raised money to acquire another company. In this case, in kind of like shady fashion, which we're going to talk about in the risk factors later on. But basically, Landcadia LCA is acquiring Golden Nugget Online. Now, you probably know Golden Nugget as a casino in Las Vegas that then expanded to other states. Now, when New Jersey allowed online gaming, well, Golden Nugget was one of the first companies to get a license and create their online casinos. So I'm on their website right now. You can see a lot of different games that they have available. Since I'm not in New Jersey, I can't create an account and actually play for money. But if you guys go online, you can actually look at the demos for the different games, kind of see like what the online gaming experience is all about. But for today, what we care about is short-term momentum plays. Like, can we actually make money with this in the short term? So for that, the first thing you want to look at is the chart. Now, we don't have a lot to go on with Lancadia because not only is it a new company, but also it's one of the first companies in the online gaming market in the United States. So we don't have a lot of things to compare it with. The best things we can compare it with is number one, of course, Draftkings, which is kind of the same like competitor, and we can ask like, is it the next Draftkings, right? Or also we can look at other SPACs, and because as I mentioned in previous videos, they often follow the same trend. They're pretty flat. Then when the announcement of the target is mentioned in the news, there's spikes, then it dies down, stabilizes, and then eventually when it merges, it goes back up. So if we look at Lancadia here, we have the announcement, and of course, immediately it shot up, but it didn't go that high. Usually, we could have expected that an online casino would have gone, pretty much hype. It would have gone a lot higher, but in this case, it kind of died down in the 60s. $16 ranges, and then started dying off, went all the way back down to 12, and now back up, and then it's stabilizing around 12.50, $13, right? So that's what we're looking at right now. Now, if we look at DraftKings, which is basically the closest company that we can compare Golden Nuggets Online to, well, we can see that when it was announced that they were going to merge, they went up to the $18, $19 range. I see a high of 19.5, and then it went back all the way down to 11, $12 during the crash, and then it picked up steam as it got closer to the merger, then peaked in the low 40s, and now it's back to the 30s. So again, I expect kind of the same type of reaction with Golden Nuggets Online as we get close to the merger and then after the merger. It's probably going to keep dropping until then and then steadily pick up. So if you're after a momentum play and you're a little patient, within 3 months, the same thing should probably happen. Pretty good risk versus reward, in my opinion. All right, now let's move on to the long term prospects for this company. And this is very important because, as I've mentioned in previous videos, the fundamentals are what protects our investment. Whether you're a short term or long term investor, if the company is sound, that gives you more protection and less downside. So this is especially important for a company like LCA, which does have a track record. So that's good for us when we want to analyze it, but we don't know if the market is going to reject it or if it's going to embrace it like it did with Draftkings and give it a high valuation. We really don't know. So the fundamentals actually protect us. Now we want to look at the management team. We want to look at the size of the industry so we can see what the maximum potential is. And then we want to look at the financials and the valuation. And that's going to give us a pretty good idea of if we want to invest in this company long term. So now let's look at the management team. I'm not a total fan of it. There's been a lot of controversy with this transaction. I don't know if you guys are familiar with it or not, but basically Tillman Fertitta owns the Laundry Group, which owns a lot of different properties, including the Golden Nugget. The problem is that in this case, he's both on the sell side and on the buy side because he's involved in the actual SPAC, right? So he's self-dealing in this transaction. That is very shady, and we don't really like that. So that to me is a big negative. And when you actually inspect why people are so suspicious about it, it is because when we look at the proceeds from the transactions, out of this entire transaction, the Golden Nugget Online is only going to get $88 million, right? Because even though they get a big influx of money, 150 million of those, I don't know if you guys can see it on the screen, but 150 million dollars of that is going to go to pay down debt. Well, that debt was accrued by Tillman Fertitta and his company, right? So his entire group has been kind of crushed from the pandemic, and now he's passing on some debt to the entity. This is very dirty. It's probably legal, right? But we don't really want that, especially now that they're going to be expanding potentially to other states. The more cash they have is better. So the fact that 150 million is going to pay down debt and then you have all sorts of fees is just not good and leaves a sour taste in our mouth. So he's going to be the chairman and CEO. Take that as you will. So I'm not a fan of the CEO, and that's a bad start. However, thankfully for us, especially if you're interested in LCA, we have Thomas Winter, the president, and Warren Steven, the VP of Product and Operations, which both have a very good resume. They were both a part of BetClick, which is a European gaming company, and they've been with Golden Nugget Online. Thomas Winter has been since 2013 in charge of Golden Nugget Online and has led them to the growth that they have right now. They've been profitable for a few years now, as we'll see in the financials. So this guy has a lot of experience. And if you guys know anything about the European market, it's very highly regulated. So the fact that he's experienced with that, he knows how to deal with the regulation and be conformant to it, is very good for the expansion in the US, where you'll have all these different state laws to handle. So I have faith in this guy. As long as he's left to do his thing, as long as Fertitta doesn't interfere day to day, I think we're going to be okay. However, it still leaves a sour taste in our mouth. All right, here comes the exciting part. This is what we're all so hyped about, and that is the potential size in the United States for the iGaming industry. Now, if you guys know, online gaming has been banned in the United States for a long time, except they actually allowed it in New Jersey in 2013, and that's where Golden Nugget Online got their license. Now, as the states are starting to need more and more taxes because we're facing tough times, different states are starting to allow casinos, including Pennsylvania, where they're already approved, so they'll be launching that in 2021, and then Michigan, where they plan on launching that in 2021 also. They already got an agreement with a tribal casino to partner up there. Now, if we look at the market size, this is where it starts becoming more interesting because now we get actual numbers. So they claim that by 2025, the iGaming industry in New Jersey is going to be 950 million, of which they're going to have about 15% market share. But now look at Pennsylvania. They claim that the market size in 2025 is going to be 900 million and they'll gain a 10.5% market share. Well, if you look at those numbers, that means that by expanding into Pennsylvania, they claim that they almost doubled their revenues. Now, if you add Michigan, that's smaller at 600 million, but again with a 10.5% market share, that means that we're talking about a potential 150% increase in their revenues. And that doesn't account for other states that are thinking about opening online casinos, right? That's very good for us. Now, if you look at the $780 million for New Jersey, if we expand that to the entire population of the United States, we can look at a potential $22 billion industry, of which, again, they're all projections, but if they can get a 10.5% market share, that would give them $2.2 billion or more. So that's potentially a very good size for the industry. Now, if we look at this little chart, it gives us a good idea. So right now they're in New Jersey and they have about 13% of an $800 million market. Eventually, they expect to get 12% of a $2.5 billion iGaming market that includes New Jersey, Pennsylvania, and Michigan. And then over time, they expect to get about a 10% market of a potentially $22 billion market. So that's pretty big opportunity for expansion. And that is mostly in iGaming because Golden Nugget Online doesn't have a big expertise in sports betting or online poker. But one of the good opportunities is eventually they'll be allowed to consolidate, so they might be able to acquire another company that specializes in sports books or poker, online poker, right? When those become available too. So there's a lot of growth potential both in the pure online gaming market and also expanding into sportsbook and into online poker. So those are unknowns. We don't know if that's going to happen, but just keep that in the back of your mind that there's a lot of different verticals that they can approach in the online gaming market. Now we can actually look at the financials, and what's cool about the investor presentation is that they have all the information neatly in place for us. So if we can look at the financial performance here, in 2016 is when they started becoming profitable. Now 1.3 million I know isn't really exciting, but if we notice the growth in revenues and profits is pretty steady, and that doesn't include the Pennsylvania online casino or the Michigan online casino. So we can expect that those numbers are going to keep growing. Now, look at the number on the longer term chart. I mean, in 2014, they barely made any revenue, but under this president, who actually knows what he's doing, they steadily increased their revenues and they got a pretty good market penetration in New Jersey. Now, look at 2020. This is very interesting. With the pandemic, we know that the market is very volatile and a lot of companies have been struggling, but not LCA. I mean, Golden Nugget Online is actually doing very well with the pandemic because as casinos have restrictions on them, people stay home and they actually enjoy playing online. So look at the big spike in revenue and eventually for us profits. So it's kind of odd because while a lot of companies are suffering, this is actually good for us if we want to invest in LCA. Now, obviously, it's temporary, it's not going to be a long term permanent thing, but for now, while your other investments in the stock market can be like risky, sometimes they might be losing money because of the pandemic. You don't have to worry about that with LCA. Now, if we look here, we can see a steady increase in the gaming revenues, the net revenues over time, and look at the profits, the net revenue for the first quarter of this year, 25 million. So we can expect that they're going to have a very good year in 2020. And that's going to be the first year the company's public, so that's going to be pretty good. Now, if we look at there's a lot of reporting from New Jersey since it's very highly regulated. They report that the internet gaming win increased 94.4% to 422.7 million when compared to the prior period. This is what I was talking about. The pandemic, it really helps the online gaming. So New Jersey is actually losing a lot of taxes from their physical casinos, which are transferred to the online platforms. So that's very good for us potential investors in the company. 2020 is going to be a spectacular year, and then 2021 as the expansion in Pennsylvania, and Michigan. And after that, we don't know. They'll probably expand to other states. All right, guys, and now the last thing we want to look at when it comes to financials is the potential valuation for the company. This is very important for us as shareholders because that's what dictates if we're going to be making profits or not. Now, if we look at the 2021 expected revenue for Golden Nugget Online, we have $122 million, as opposed to 733 for Draftkings, which is the only really company in the US that we can compare them to. Now, what's interesting is Draftkings. I know that they're going to be launching online casinos in Pennsylvania and everything, but as of now, their cash flow is negative. They're actually losing money. Versus Golden Nugget Online, as we saw in the previous charts, they've been making higher revenues and higher profits every year, and they expect to continue that climb. Now, if we look at the actual valuation at a $10 stock price, which is what the SPAC starts at, it gives that a valuation of about $745 million. Now, we know that, the stock price fluctuates, so let's take it as a $1 billion valuation. Well, DraftKings right now is at 11 billion, so it's a lot higher. Now, DraftKings, when it launched, there was a pretty big spike in the stock price. It went from $10 to about 42 before it started going downward. But so, there's a lot of space for golden nuggets to keep going up. Now, if we look at the compounded annual growth rate, this is 34% for DraftKings and 36% for Golden Nuggets. That's a very, very good, healthy growth rate. Now, we're talking about a growth stock. This isn't like a dividend play yet. But however, if we look at a comparison with the European market, now this is where it gets interesting. Now, in 2019, the average PE ratio for companies in the European market, in iGaming, was 12.6. So if we go back to the Golden Nugget Online in 2021, of course, we can't expect that it's going to be exactly the same thing, but this gives us an order of magnitude. Like we need to get data somewhere, right? I just can't just pull it out of my hat. So this is the best we can do. So at 122 million at a 12.6 PE ratio, that would give us a value of about $1.6 billion. So that is pretty good. I mean, that means that by next year, if we stuck to the European market pricing, the company could be worth about 1.6 billion. Now, with the hype, it's possible that it's going to be a little higher, but let's keep that in the back of our mind as kind of the basis, the floor, if you wish. So what's really interesting about the European market is that these iGaming companies over time become dividend stocks, right? And the average is about 6% dividend. That's really interesting for us because we know that online casinos are cash cows, and that's what we want is really good cash flow. Now, what's interesting with Golden Nugget Online is right now you can get it at a very low valuation. We expect that next year it can be worth 60% or more, right? So these are all mature companies over here that are spitting out 6% per year. So let's say that right now you bought your shares for 12 bucks. Eventually, when it's at 20 and you get your 6%, well, because you bought it at a cheaper price, that dividend yield is actually magnified if you think about it that way. So your 6% might actually be 10% dividend yield. So that would be pretty good for you as an investor. Everyone would agree that 10% dividend yield is actually pretty good. So it all depends at what price point you get in. In a case like this, the sooner the better. So for now, Golden Nugget Online is considered a growth stock, but we can assume that over time, as it develops and becomes mature in the United States, whether that's in 10 or 20 years, it's probably going to become a dividend stock and generate pretty good yield. All right, so we're almost ready to wrap this up, but before that, we have to talk about what are some of the risks that the company faces. Now, one of the biggest risks is regulation. As we know in the United States, each and every state has different rules and regulations that the operator has to adhere to. That is a problem. That's an expensive problem. But each and every state has different rules, different licensing requirements, and different taxation. So the operator has to navigate through that kind of like a minefield. Thankfully, the president of the company has experience with BetClick in Europe, which also is heavily regulated, and he also has experience in New Jersey. So he knows the system. He knows how the game is played. So that's good for us. And we also know that all of the states in the U.S. need a lot of taxes right now. So casinos are a lot more accepted than they used to be. So that is a risk. Even though I think that a lot of states are going to open up, we really don't know when or how they will because there isn't one body of legislation in the US that controls all of it. So each little state can do what they want. So that remains a risk. Keep that in mind. Eventually, we can assume that more states are going to open up, but for now, we're limited to 3 states. So I'm basing my calculations on these 3 states and if I think the company is going to be profitable. And if any other states open up, it's all bonus, it's all gravy for me. Now, another risk that we face is the competition from other operators. Now, in New Jersey, Golden Nugget is considered one of the leaders. It has 10.5% market share, and that number is a little deceiving because 10.5% doesn't sound like a lot, but that's because they only focus on online gaming. They're not really big into sports books or online poker at all, right? So their share is a lot lower than what it would be if we only considered online gaming. Now, one of the risks is that in the other states, they aren't well established already, and they will be facing much more stiffer competition. Like in Pennsylvania, they're already going to be up against Draftkings, which has a big pool of players on their site already, as well as probably other companies that are going to emerge. Like the more states open up, the more competition there's going to be because everyone's going to want a piece of the pie. However, what we could see from the New Jersey market is that even with a 10.5% market share, which isn't a lot, the company can be highly profitable. And that's the beauty of online gaming. That's why I find it so attractive is the fact that it's very hard to lose money with an online casino. It's like a printing machine. Alright guys, so now we're at the end of the video. This is what am I going to be doing about LCA, GNOG, Golden Nugget Online. Well, you guys probably thought about it right now. Give me all the golden nuggets. I'm into this stock. I started buying at 12.40 and I plan on getting more shares. However, I have to tell you right up front, I'm not going to be keeping all of my shares. My goal is to buy more shares in the 12 to 13 range. And once the stock actually merges, if there's a pop, I'm probably going to drop 50% of my shares and keep the rest long term. So if it goes back up to $16, $18, that's where I would look to shed 50% of my shares and keep the rest as a long-term play. As usual with these SPACs, I don't expect that we're going to see a huge pop before the merger happens. Like right now, it's at 1360 after hours. I'm not sure if there were news of some sort, but these stocks always face a lot of headwinds before the merger because there's not a lot of institutional buying at all. And as soon as the price goes up too much, you have day traders really attacking it and shorting it. So usually they stay fairly low. So right now I wouldn't buy at 1360. Personally, I'm looking to buy more shares when it goes to like under 13 preferably. But after that, I'm going to be dumping 50% of my shares when it pops. So that's my strategy. That's what I'm going to be doing this stock. I'm going to be doing 50% short-term play and 50% long-term buy and hold. Because even though I don't like the management team, like I'm not crazy about it, it's very hard to lose money with an online casino. It's like a printing press, right? Like that historically they always do well. Even if you looked at the chart for the European casinos, they all do well even though there's competition. So that's how I view this play. I'm not going to go all in on this stock, right? There's other stocks that I'm more interested in, but I think it's a solid long-term play. So that's how I'm going to play it.
All right, guys, so what do you think about this company? Are you going to hold it long term? Are you going to try to do a short term momentum play on it? Please tell me in the description. I love to hear your comments and, of course, subscribe, and I'll see you in the next video.